Good morning, everyone. This is Daily Trading Analysis with the weekly recap for this week, which I've been really out of the loop because I was sick, but now it's time to really go through everything this week has to offer. And the first thing I would like to say is that we are in balance, but that doesn't mean that we are in a better shape than we were a couple of weeks ago. We are still in a bearish sentiment situation, the macroeconomics, the tariffs, and now the Fed is also scared about these tariffs. The possibility of reciprocal tariffs is raising fears of slower global growth, and basically, Chair Powell has indicated that these tariffs could potentially delay further progress on inflation, and that's why they didn't touch the interest rates on Wednesday. We are there, we didn't cut anything because these tariffs are increasing the cost of everything. And apart from that, we are also seeing mixed economic data in the housing, in the industrial production, and US retail sales. As you can see here, they are pretty negative. We were in the minus 1.2 previous. We were expecting a positive number here in the forecast, but we didn't get there. We got the 0.2, increasing the fears of a slowdown even further of the consumer spending. And remember that the consumer spending is 1/3 or even 2/3. Consumer discretionary is 2/3 of the economy. So basically, we are seeing everything slow down. We are seeing other countries put more tariffs in our products, so that increases the concerns about prices in the US. That's why we saw the import prices going higher, 0.4% when we were expecting flat. We are seeing negative export prices. So US is more and more going in a direction of isolation. And that's pretty bad for the economy. In terms of price action, excuse me, we are seeing, this is the weekly chart, we are seeing indecision. We were basically flat. We are 0.21 on the week. And as you can see down here, we got the Qs, volume at the left and advanced decliners at the right. And we saw a little bit of push on Monday and Wednesday, but then Thursday and Friday were really flat into downward trend. And the ES is similar. We are seeing the volume decline on the ES and the advanced decliners on the ES also. So pretty standard situation in which we've been like 4 straight weeks in the red, falling apart everything, the Qs, Tesla it's being destroyed. It's 50%, 56% of its highs, and this is really crazy. This is signaling that people is not happy with Elon Musk entering the government and doing certain things. And we are in a situation in which we have to wait and see. I told you that this week was a buy signal. I think it's a period of uncertainty, but some people is buying this dip. But we are certainly, look at this down here. Look at these lows. These lows are pretty damn good. Are below 19,000, almost at 18,000 on the Qs. And the ES has this trend that it's right here doing this. And I think this kind of move towards this zone of low 5,000s might be another leg down. That's my opinion. That's the way I see the market trading down until a good enough catalyst enters the news and the media and we can leverage on that. Until then, This is the daily chart on the Qs. Look at this on the NQ. There's just nothing burger. It was just nothing, 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 nothing. It was basically a 500 point range week in which we had no opportunities, in my opinion, because we got things like this: pull down, pull up, down, up. And now we are seeing some kind of push again to the middle of the range. So there's nothing I would signal, I would highlight during this week apart from balance. Balance, uncertainty, and wait and see. In terms of other markets, what I can see is that the Russell is also waiting to see what happened. UK and Germany, Japan are also waiting. Europe markets are also higher due to all this rearm of the Europe is building upon, and treasuries are down. That's really bad. High yield corporate bonds are also risk off. Yields are starting to pull back a bit, so I think more and more we are pricing in a June cut from the Fed. But the most important thing to watch, I think, is the dollar. Dollar reflects the economy health of the US. And we've seen how we've been pulling back more than 6%, and this should be helping stocks. But we are not seeing that. We are seeing sectors like technology pulling back like 14%. We are seeing financials pulling back 10%. We are seeing consumer discretionary, look at this, 20%. And these are entire sectors. So what do we got from this? Semiconductors also pulling back. At some point, we need some kind of positive, good enough catalyst for people to trust the future. And unless the tariffs strategy change, I don't see this happening anytime soon. And this is sad because we are seeing this kind of market which doesn't provide any kind of realistic trend that we can position ourselves off to really have some good trades. This is just volatility. There's a lot of sentiment, a lot of fear in the markets. And let's just check the VIX. Yeah, the VIX it's broken, man. The VIX is just broken. We should be in a way better position in stocks unless something bigger is happening. And I think the term stagflation is what might happen at some point. We are seeing lack of growth. We are seeing more and more inflation under control or even ticking higher. Fed is afraid of this tariffs strategy to impact the progress on inflation. With lack of growth, this is just a stagflation. We are seeing how the Fed cut the GDP growth to below 2%. And I mean, that's the US, and that would also affect the rest of the world. So in terms of technicals, I can see the market, as I said, clearing these lows one more time. And let's see what happens below 19,000. Because there's certainly an area of interest down here at 18,000. We might see certain levels, for example, 19,000. That would be great. And if not, 18,000. But I don't see this market going higher. I only see a couple of bounces and then continuation to the downside. Because nothing has changed since this time. And I think there's more fear. People is just really stressed about the fact that Tesla is in the government, that Nvidia is not anymore pushing the markets, Apple and Microsoft are not doing anything, Meta is just joining the government in certain policies. So I can see the market really continuing lower despite this pause. I think this is just a pause. We are seeing some technical levels that might be interesting for big leveraged players. So that's that's my opinion. I think we are not safe yet. I thought that maybe last week, but I have to adapt to the market, and I don't think this is a proper accumulation. I don't think so. So we need more patience. We need to be on top every day of every news from Trump, from Feds officials, from tariffs, from other countries, from economic data. We need to be on top. This is our job, to be on top of everything. And that's all from my side. If you found this video useful, please support the channel by subscribing, by giving a like, drop your comments, give me ideas on what you need, because I'm doing this channel the way I like someone else to give me information, but you have also an opinion. Share your opinion in the comments down below and I will try to adapt. Let's build this channel. Let's do this our home for practical, useful, technical, and fundamental information. So thank you for the support. Thank you for being with me, all the subscribers. And this is a channel that it's for you, for everyone. So welcome if you're new. And remember that this is an industry that it's really difficult. If you want to spend your time doing this, if you want to make your own trading, you really have to put a lot of effort. And I'm trying to help on that. So if you like that, just give the thumbs up and remember that patience, discipline, risk management, video after video, I'm saying the same. Those are key for your success. Stay safe, everyone. Have a nice weekend. Remember to just go out, try to disconnect a bit, and be back on top on Monday. Take care.